Morning, everybody. It's 8:25 on Black Friday, the 29th of November. Hope everybody had a great Thanksgiving yesterday. Today is only a half day, 1 o'clock for stocks, 2 o'clock for the bonds, and so I really wouldn't expect much. At 6:30 when I came in, the Dow was up 146. At 8 o'clock, it was up 114. Right now, it is up 101. The NASDAQ was up 74, then up 31, now up, 41, now up 34. The S&P was up 16, then it was up 12. Currently, it's up about 11. So really not much going on. No economic news, except of course the FTC trying to close out the year and the administration coming back at antitrust for Microsoft. What a surprise. And a new target, Uber. FTC suing them about making automatically signing people up for Uber One and then making it difficult to cancel. It's a subscription service. Uber has come out and said it takes 20 seconds to opt out of it on their app. So, again, just a little bit more overreach, as we are so used to seeing from this administration. As far as other stock news, we have Amazon up a little, although workers are going to supposedly protest today, according to NBC News. Stellantis lowering Italian output due to, surprise, weak EV demand. Meta up 30 cents. Mark Zuckerberg having dinner with President-elect Trump at Mar-a-Lago. Who knows? And the Microsoft is down $2.16, or 0.5% on that FTC investigation. Asia is slightly lower. Europe is mixed to slightly higher. The chart on the screen is the Brazilian real. This is a long-term chart. It's a monthly. It goes back to 1995, about November of 1995, and we are making new all-time lows here. It was a little over $1. It is now 16 cents. So this is really devastating. I would expect, however, that some of the stocks, especially some of the mining stocks, and this may have something to do with why the copper has been a little on the weak side, but this doesn't go on forever, although it could be a particularly ugly situation in the short term. A look at the open interest over the last several months shows a big decline on declining prices, and so that would mean long liquidation. So let's take a look at the rest of the list. Grains are not open yet. Oil up a little. Heating oil up a little. Gasoline up a little. Nat gas. This nat gas, I'm telling you, this nat gas is really coiling up. I want to go to the daily here. Because the volatility and the velocity, as I mentioned the other day, the velocity is really getting intense. I mean, you look at these days, in consolidations, where we have a 2-point range, a 3-point range, a 5-point range. And then you start to look here where we had this sell off where this was a 12-point range. The next day it was a 22-point range, continued down, bottoms with a 24 cent 24 cent range. I mean, these are huge numbers. And then you get into the last couple of weeks, 22 cent range, 9 cent range, 40 cent range. On Wednesday, the day before the holiday, another 30 cent range. Today's range already 17 cents. So, I'm not sure which way it's going to go, whether we're going to break this low and go lower, or whether we're going to turn up and break through. I'll show you on the weekly because it's an important area. But, I don't know whether we're going to come back down and test $2, or whether we're going to, go back, break these highs and go back to $5. It's, really up in the air. A look at the rest of them, though. We have the gold up 20, silver up 74. I definitely favor the silver over the gold in here on the ratio. Long 2 silver, short 1 gold. Today, so far, long 2 silver would be up 7,600. Short 1 gold would be down 2,000. So that's a pretty big spread. Copper basically unchanged. I gave you the interest rate. Well, let's see. Bonds are up 13/32. The 10-year up a little, basically unchanged in the 5. We have Bitcoin being all over the place, as high as 98,900. Last is 98,200. That's up only 270, although the cash was substantially higher. This is a pretty major bounce off of a really big decline. I mean, last week when we had this move up to 101,000, all of a sudden earlier this week we were back to 91.7. Now we're 98,215 again. So also all over the place. We're seeing pictures on TV of shopping centers, malls, etc., and hearing Dana Telsey talking about maybe 3 to 4% increase, but J. Rogers Nippon talking about the fact that people are buying more apparel and doing less travel this year. He expects it to be up bigger than that. So we'll see. We'll see what consumer debt looks like in January also. All right, folks, that's about it. Enjoy the half day and the sort of long weekend, and I will be back on Monday.